Hello everybody. So this is going to be a quick video. Hims versus LifeMD, which is the better buy right now? And many of you in the comments section have asked that question. So this is a quick update on the valuation and the valuation alone of Hims and LifeMD per my spreadsheet. And as you know, Hims is a long-time channel favorite, entered the stock in the $6 to $7 range. I've been covering it for over 2 years. It's the leader in the e-doctor and e-pharmacy space, right? It's both a digital pharmacy and a digital doctor all in one without insurance. They don't take insurance. And that's mostly true too for LifeMD. LifeMD helps you qualify for pharmacy benefits, but they don't take health insurance itself, right? The insurance that pays for the doctors, LifeMD also doesn't take. But LifeMD takes a little bit of pharmacy benefits. That's just a minor distinction, though. LifeMD is also an e-doctor and an e-pharmacy, but it's a very small cap. It's a mini Hims. I've called it before a mini Hims. It's a new addition to the portfolio. They've launched their own pharmacy, but it started, LifeMD, if you follow, it started as, I'm going to call it the Netflix of doctors. The offering is slightly different. You can deal with issues that are slightly worse than the issues with Hims. Hims focuses on preventive, very minor health issue. LifeMD can handle a little more advanced things like diabetes, for example. And the way I call LifeMD is the Netflix of doctors. It's a subscription, and their deal is like $39 a month. And for $39 a month, you get one office visit a month. And when you know the cost of an office visit in the United States, between $175 and $480, depending on what you come to see the doctor for, and depending on the reason. That's at my local clinic, the cost that they charge. $39 a month sure looks like an insane bargain, and I have no doubt that they have a lot of subscribers. So anyways, slight differences. LifeMD is the baby Hims. It's the mini Hims. It's the tiny play. It's the riskier play. Hims is now becoming less and less risky. And so it's all about the valuation, comparing the valuation. And so as of right now, as I shoot this video, on the valuation of both of these companies, dirt cheap. LifeMD is obviously cheaper, but it's riskier. LifeMD is trading at enterprise value over gross profit, over revenue growth of a 0.042, while Hims is trading at enterprise value over gross profit over revenue growth of a 0.086. And if you're new to the channel, which I don't think you are, most of you click on this video probably know the channel, but anyways, that metric is my spin on the PEG ratio. I've changed the PEG ratio, and I don't use market cap. I use enterprise value because I much prefer it. There's all sorts of reasons as to why a bunch of people prefer EV. I prefer EV. I use gross profit, and I don't use earnings because I think most of the companies that I invest in now, early on, they're optimized for gross profits. They're not necessarily optimized for earnings just yet enough. So it makes very little sense to use earnings, in my view, for early on companies. And I use revenue growth as a number, right? Just not as a percentage, as a number, just like the PEG ratio uses. So that hasn't changed, and it's revenue growth and not earnings growth, of course. So it's a slight change. But anyways, it's a way to compare the growth adjusted valuation of companies, because as you can see, it takes into account, price to quote unquote gross profits, right? Not quote unquote, but like price to gross profits to the actual max profit potential. So the true economics of the business, and it adjusts it yet again for revenue growth. Rule of 42, but we're not going to compare Rule of 40 here for these two, because Rule of 40 is not a valuation-based metric. It's just a metric that measures a business's effectiveness, but it doesn't measure valuation. So EV over GP over RG is really the relevant one to compare this pair of LifeMD to Hims. And it makes sense to compare the two stocks because they are in the same sector. I wish Roman was public. If Roman was public, I would have 3 stocks that I could compare, but Roman is private. I bet you if Roman was public, I would probably like Roman too and have Roman in there. Anyways, the point is it's a 2.04. So right now, Hims is only 2.04 times more expensive than LifeMD. That means Hims, in my view, is cheap. I think Hims should be trading at a higher premium to LifeMD. Hims should be more than 2 times more expensive than LifeMD. Therefore, I prefer Hims right now. Now, to give you a comparison, if I go back to the peak, and these stocks have at peak in February 19, February 18 after hours, that was the peak, and you can see how correlated these two companies are. I mean, if you look at these two charts, look at the correlation. But what is that? Is that an 80% correlation? Probably something like that. Extremely correlated, these stocks, because we're essentially the same industry, same business model, same everything. So anyways, if you look at the peak was February 18 to 19 for both. The peak for LifeMD was $8.28. The peak for Hims, and intraday it went higher, but for Hims that was a 68.74 is what it closed at. That was the peak. So let me show you the valuation at peak, and I tried to match with a multiplier here that valuation. So those numbers are correct. That's what the valuation would have been at these peak prices. And so at these peak prices, LifeMD would have been valued at 0.06 and Hims would have been valued at 0.201, which means that when this happened, Hims was actually 3.2, let's call it 3.2. Hims was 3.2 times more expensive than LifeMD at the February peak. So in that case, at the peak, LifeMD seemed like the better deal. When you were confronted with paying 68 for Hims and paying 8 for LifeMD on February 19, LifeMD sure looked like the better deal. But today it's a different story. Today you're only paying 2 times the price of LifeMD for Hims. So today, Hims, in my view, looks like the better deal. And it's all about looking at this pair. And this is what I will continue to do as I allocate to this sector. I will continue to allocate based on, which stock is cheaper relative to the other stock. So when Hims is 3x times more expensive than LifeMD, I prefer LifeMD. When Hims is only 2 times more expensive than LifeMD, I prefer Hims. And also, another way to think about this is look at my spreadsheet, right? If you're on Patreon, you have access to my spreadsheet. I have more than 200 stocks. And that's a little unfair to say it's a dime a dozen, but there's a lot of them in my spreadsheet. Like there's a lot of stocks to choose from that trade at a 0.20 EV over GP over RG. There's a lot of quote unquote that would be considered cheap, by the way. That's still a cheap stock, but there's a lot of cheap stocks out there. Now, stocks trading under a 0.1, that's very rare. That's always very rare. They very rarely get this cheap. And Hims right now is under a 0.1. So I can get a much higher quality business than LifeMD, in my view. No offense to LifeMD. I own LifeMD too. But I can get a higher quality business than LifeMD for a valuation that is equally hard to find. That is just as hard to find. So anyways, like I said, so right now I prefer Hims. There's no doubt in my mind that Hims should trade at a fairly big premium to LifeMD. I think right now the premium of Hims over LifeMD is not high enough. I think if the premium, if Hims becomes 3 times more expensive than LifeMD, again, then I will be focusing on LifeMD. But right now, Hims is not trading at a high enough premium compared to LifeMD in my view, and thus I prefer Hims. So hopefully this helps you kind of understand where I'm at, and feel free to look at the valuation right now versus the valuation when we were at the peak, and you can decide for yourself which one you like best. I know both of these stocks are liked by my viewers. So anyways, this was not financial advice, not investment advice. This is only entertainment, of course. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.